All right, let's jump right in. What if I told you that you could completely transform your trading? I mean, go from random clicking to a super precise, repeatable system just by mastering one single concept. Well, that's what we're breaking down today. We're talking about how to get that sniper's edge.
And look, this isn't just some random tip I found online. This is the exact sequence that top smart money concept traders, the big institutions, are absolutely obsessed with. Why? Because it flat out removes like 90% of the randomness and guesswork from their trading.
And this slide just nails it, right? It frames the entire journey perfectly. Over here, you've got the gambler. They're reacting to every little price flicker, they're chasing moves, and, let's be honest, they're blowing up accounts. But on the other side, you have the sniper, patient, disciplined, and strategic. This whole explainer is about how we get you from here to there.
Which brings us to the first massive mindset shift. Professional trading is not gambling. To make that leap from the gambler to the sniper, you have to completely ditch the idea of luck. This isn't about rolling the dice. It's about having a rock-solid, logical framework.
And here it is. This might just be the insight that changes everything for you. If you're struggling with consistency, the problem probably isn't your entry signal. Nope. The real problem is the lack of a framework, a foundational bias. The fix happens before you even start looking for a trade.
So let's build that foundation. We're diving into the absolute cornerstone of this whole thing, establishing your bias. According to the pros, this is the single most important piece of the puzzle. Every single winning trade in the system starts right here.
Now, when we say bias, we're not talking about a gut feeling or a wild guess. It's a structural read of what the market is actually trying to do. We're zooming out, looking at a higher time frame, like the 4-hour chart, to figure out where the big money is most likely pushing the price.
Okay, this concept is so simple, but it is an absolute game changer. Once you've marked out your trading range on that high time frame, you just cut it in half. The top half, that's your premium zone. Think of it like a store. You don't want to buy stuff when it's expensive, you want to sell it. The bottom half is your discount zone. That's where you look for bargains, that's where you buy.
And this is the one rule you cannot break. Write it down, tape it to your monitor, whatever you have to do. By simply refusing to buy high in a premium zone or sell low in a discount zone, you automatically filter out a massive number of terrible, low-probability trades. It forces you to be disciplined from the very start, period.
Okay, so that all sounds great, but how do we actually do it? How do we build this bias in a practical way? Well, that's where the sniper's map comes in. It's a top-down approach, kind of like zooming in on Google Maps, where we move through different time frames to get a crystal clear picture.
See, each time frame has a very specific job. The 4-hour chart gives you the big picture story. That's your main trend, your bias. Then you drop down to the 1 hour to confirm the structure is still in your favor. The 15-minute is where you start to pinpoint your exact zone of interest. And finally, the 1 or 5-minute chart, that's for execution. That's for taking the final sniper shot.
But wait, how do you know the trend you're seeing is legit and not just a bunch of random noise? Well, you need to see these 3 things. First, a clear break of structure, or a BOS, in the direction you want to trade. Second, you need to see a big, powerful candle. We call this displacement. It's like a sledgehammer move that shows real institutional force behind it. And third, price has to pull back nicely into your premium or discount zone. You need all 3. It's not a pick 2 kind of deal.
All right, so we've got our high-level bias locked in. Now for the fun part. Let's connect that big picture view to the precision entry model. This is where the whole plan comes together. And this is where it gets really interesting. A truly great setup doesn't just appear out of nowhere. It's engineered. It starts with a trap. Smart money needs liquidity to fill their huge orders. And where do they get it? They get it from the gamblers, the emotional, reactive traders. So, what does this trap look like? We call it a liquidity sweep. It's when price just pokes above an old high or below an old low, grabbing all the stop losses sitting there, and then boom, it snaps right back inside the range. This is step 1 of the entry, and it is absolutely non-negotiable. If you don't see the sweep, you walk away. Simple as that.
So the trap has been sprung. Check. Liquidity has been grabbed. But a real sniper doesn't just fire at the first sign of movement. No way. We wait for proof. We need confirmation that the sweep actually worked and that momentum has shifted.
And that proof is what we call a change of character, or a CHOC.
This is when the small, internal structure that created the sweep gets broken. It's the first real signal, the green light, that the big players have flipped their position and now we can start looking for our entry.
All right, so we've got the trap, we've got the confirmation. Now it's time to zero in. We're looking for that final piece of the puzzle, the precise spot on the map where we're going to plan our entry.
And that spot is very often a fair value gap, or FVG. Now this isn't just some random zone. An FVG is a specific 3-candle pattern that leaves a visible imbalance. It's a footprint left behind by huge institutional orders. Price acts like a magnet to these gaps, often coming back to fill them, which gives us an incredibly precise, high-probability entry point.
Now look, you can have the best model in the world, but it means nothing without discipline. So let's talk about the hard and fast rules that separate the consistently profitable traders from, well, everyone else.
This one is paramount. The absolute maximum risk you should ever take on a single trade is a strict 0.5% of your account. Your number one job as a trader is not to make money, it's to protect the capital you have. You're a sniper, not a machine gunner firing randomly.
The source material is brutally honest here, and I love it. It lists the mistakes that separate the 1% from the clowns. Things like jumping in without a liquidity sweep, completely ignoring your high-level bias, forcing a trade before you get that confirmation. These are the simple, totally avoidable mistakes that destroy accounts.
So, at the end of the day, it all comes down to this. This entire framework is built for precision, for patience, and for stacking probabilities in your favor. It's about being a sniper in a market full of shotgun traders. So, the only question left is, which one are you going to be?